All right, let's jump into things. Where we at? 10:34 on the 5th of August. So Tuesday morning. So look, in terms of sort of news and data and that, as I said over the weekend, I mean this whole week is looking pretty sparse in terms of data. We got a bit of ISM. So basically we got PMIs sort of coming out sort of through today. But yeah, the ISM services is probably the one that may sort of move the market, if anything. But apart from that, again, look, it's all fairly low tier data and that. So it gives a bit of an idea about how, I guess, the rest of the market is and the other sort of economies are sort of faring at the moment. But I wouldn't say that any of these things is kind of like drastic, sort of pre-positioning sort of bits of data for the market. So I guess with this kind of thing, we kind of fall back to a little bit of sort of sort of price action and structure to sort of see how the buyers and the sellers hold these things because those large bits of data are good because they can add quick, fast volume to the market. But should that not sort of be there, well, the absence of that because we don't have any large bits of data coming out, you pretty much have to almost sort of rely back on the technicals to sort of see how things are holding. But through yesterday, we had I saw actually this bank holiday was more just sort of apparently only isolated to New South Wales. I didn't even know there was something going on here. I don't think it really affected the market much at all. Inflation gauge for Aussie here, look, 0.1% expected, sort of obviously sort of up around 0.9%. That's obviously expecting a little bit more inflation. If the market's going to position for that kind of sort of stuff, it would be more on the side of obviously a little bit of a tick in the strength side for Aussie. But as I said, at the moment, I think it's really just dictated by what the market's doing with the US dollar, which was expected to see a little bit of a continuation of that pressure from Friday, from that sort of shocking NFP. Well, yeah, actually, no, look, I'll say shocking NFP, but more sort of really disappointing NFP, but shocking revision. Again, that's just crazy. I did actually see just on that note that Trump's now sort of I think he's fired the person that was the BLS, and I had to actually sort of look up what exactly the BLS was, but I did have a description of this thing here. Um, yeah, so let me see. For what it's worth, there's a bit of a sort of a description of it, but it's the labour statistics person here. So, yeah, significant downward revision to the prior month. The president has announced a plan to appoint a successor within days, which, look, I think is fair enough because realistically, these are large bits of data, and that wasn't a small miss. And this is the kind of thing that, I mean, this is even a bigger sort of revision than we see with Aussie. I don't know, maybe I'll have to sort of check out the percentage wise of the two of them. But, these are large bits of data, and you've 1 second you've said, hold on, wait, we've added 147,000, and then the next second, oh, actually, it wasn't 147, no, it was 14. I mean, come on, that's like high school. Oh, what? I forgot to, was I supposed to have a comma in there? Like, it's just a bit, pathetic. If that's what your job is, and these are the kind of results you get. Okay, fair enough. Anyway, so yeah, she's being sort of replaced. So look, as to how much that actually affects anything, probably not a great deal, but at least hopefully you've got a little bit more reliance with the numbers because I think it was last year as well, which I assume this probably sort of falls back on the same person as well. That they do month by month revisions, but I think it was maybe around August or so, they do a big sort of yearly sort of consolidation of all the figures. And I think at that point, I think they said it was like, oh, whoops, over the whole year, even with the revisions taken into account, we accidentally added an extra 800,000 jobs than actually happened. And you know what I mean? This is what I say. You got to take a lot of this data sort of with a grain of salt, but the thing is, the market will react off whatever the number is given. So, you know what I mean? It's look, I'm not out there counting the amount of people in the job line. So, it's not really like, hold on, wait, I was counting more people and they got less. Like, I'll react off what the number is, regardless of how it is. Um, but it's a little bit hard to sort of like trust things when it's moving one way and then gets revised so drastically in a different direction. But anyway, that's that. Moving through the session today, look, we got a couple of little bits of job advertisements here, 1.8% here. How's this sort of going in particular? So look, job advertisements moving up here a little bit stronger than we've seen for the last couple of months, and that, if anything, I would say that's obviously a positive sort of thing for Aussie. So Aussie's still, doing its thing, very resilient, moving back up. But as I said, I think it's just one little pop of US dollar strength away from undoing those moves. So I'll get to the chart in a moment, but it's very much, I think it's drawing up some good sort of break lines. Um, Apart from that, as I said, PMIs, got trade balance later on with the US as well, looking to be slightly down. And then, yeah, sort of services slightly ticking up over there. So US dollar needs some good data in that at the moment because it was doing okay for a little bit there. But yeah, that NFP really sort of stopped in its tracks. All right, so in saying that, let's jump onto the charts. Look, we're on Aussie here. We'll start with Aussie. So Aussie's in a bit of a sort of continued grind kind of thing. Sorry, one sec. Which it's pretty much sort of been in since that big sort of drop off in April, and it's just been this monotonous sort of grind up in this thing. Couple little shakes, bang, bang, bang. I did sort of highlight this sort of last week that we were coming down into this point over here. This was set and ready for a break to come down here. Should that data have not been so bad and seen not US dollar sort of spark on one more time, put this on a high time frame so we can work with it a bit more. So on the 4 hour here, but we were coming into bottom side of this channel, and this is what I mean with this sort of Aussie thing. It's had wedges, it's had other channels over here, all this kind of stuff, but this seems to be what it's sort of settled on at the moment, which is basically sort of like we had this falling resistance confluence down here, which has given us sort of like about 5 or 6 touches, depending how many times you want to cut this up into it. And obviously the sort of lower side of this large channel moving up through here. Now I said, look, if it gets up above, at the time I said above sort of 80 or so, that was the level that I wanted to sort of see to have a little bit more confidence. We saw it move up there off the back of the NFP and then obviously spike back down. That's fine, and it's just really dribbled through yesterday. But I've put these little lines in here through the 60s and the 90s because they're strong reoccurring levels every cent generally that you go through, that you'll have a pretty good sort of hit ratio. Like it's not going to stop right on 60 or right on 90. In this case, it is actually stopping right on 60 on the pullback. But the point is that these are reoccurring levels with Aussie, whereas if you're coming down through it, you're generally going to have a pretty good chance of at least sort of the market attempting a move, depending what way you're going with these things, of course, for a position. As you can see, moving up here, as you sort of been into the 90s, well, you did quite well down here. Coming down into this, back in this actually into the 20s over here that have got marked out as well, you do quite well there as well. Anyway, point being is it's sort of consolidating here at the moment. It did have its sort of second effort. So this is NFP pulled back, and then obviously through Monday's session yesterday, grinded up, but really lacking, any follow through. And if we sort of break this down and we sort of go, okay, structurally, how is this working? So you got to sort of consider both sides of the coin with these things, and obviously it's a three-step thing. So you're moving down. Let's do this one here. Move down, support, move up. You find resistance. Where do you find resistance? Previous support. That's fine. Structurally working. Moves down, tackles those lows. Now these are the points where you're going to get the three moves. You're going to get double bottom. You're going to break through, lower low, i.e. continuation, like we saw here. Here's your low, resistance, tackles the lows, breaks through, starts the cycle again. Breaks through, breaks through, resistance, comes back down, holds it again, whoops. And then obviously we had NFP happen, and bang, now we're moving up. So now you're looking at it potentially on a different side. So you moved up, that's fine, you found resistance. Go through this, it's getting a bit messy here, but the point's still the same. You pull back, you find support, Now, this is the leg that you wanted to see, and this is why I had that alert set at the top over here. I moved it up to 65 on the weekend analysis, because this is the one, if you want to see Aussie move up, you have to go step one, step two, step three. And step three needs to take out that high. Now, it didn't take it out, which, for Aussie longs, doesn't mean it's dead, but it puts it on warning. Because as I said, structurally, you want to see that continuation, take out the high, reset the mode, and then go up, probably go up to sort of 65.30s, come back down, retest at 65, hold, and on it goes, moving back up over there. But the fact that let's get rid of some of these now. The fact that it didn't get through there and it sort of got a bit of a sell back down, really kind of puts it in a bit of it could go either direction here now. And I think this has now become a little breakout box for us. And I think this is what's going to give us our direction. And this is the whole point of building these charts and doing sort of at least the technical side of the analysis, is to, okay, what are we playing with? Are we playing with a trend that's moving down, a trend that's moving up? Or, as I said right now, which I do believe we're just into a little sort of a consolidation, which I also call a breakout box. And I think this is what's going to give us our direction, because we've seen that, yesterday it came down early on the open and it held 60. So that defined it. That's where the buyers are. Moves up. We know that sellers are always lurking in these 90s, or buyers, whichever direction you're going. Came up here, bang, they sold down. Tested the buyers down here, they stepped in here again. So look, it's a bit hard to call, in terms of a short-term trade, what we're going to do right here. The fact that we've come off this large, higher time frame structure support would make you think, okay, well, it's a good chance that we sort of, continue the whole thing. I mean, every time we touch the bottom, I say every time we touch the bottom, but you know what I mean? Like every time you hit the structure, you reverse back down kind of thing. So here we are at the top, coming back down. So now here at the bottom, the thought would be that, potentially you're moving up around sort of 66.50. But if you want to tackle those levels here, you need to be able to at least get that trend happening. And this is why I sort of started with that idea of the trend moving down, now the trend moving back up. If it wants to get up and target these levels up over here, obviously you've got to break these smaller levels first. If it can't even get up off the floor enough to get through there, well, it does put it in danger of this being a failed attempt to move up, breaks back down, and then you sort of step back out another level, and you think, okay, well, structurally, what are we actually looking at here? Because this is fine, like you can do these internal structures, but if you look at this in a sense of a bigger move, here's your move down, you found support, it's moved up, it's found resistance of previous support into these 90s, it should warrant a move back down to test this on a higher time frame. So you can see underneath here that it did this on a lower time frame, i.e. this 4 hour. But if you put this onto a daily, here's your big move down, here's support, moves up, get these out of the way, finds resistance. It should warrant a move back down here to see if this larger, higher time frame structure is finished. Now, the reason that I'm not sort of saying, oh, it's definitely coming down here is because you don't know how high this move could come. This move coming down over here could be support down here, could move up, and could come to here and then move down. But in terms of sort of actual structure of it all, it should warrant a third leg of this move down here. You got it 1, 2, 3, 4, 5, 6 days, around 200 points, move to the bottom side. That's worth another second effort from the sellers, in my opinion. Look, we've seen a lot of V-shapes, more V-shapes than I've ever seen. I mean, this is just garbage, garbage chop here. But we've seen a lot of V-shapes, more than I've ever sort of seen in the last couple of months. You got RSI oversold, ready to turn back up. So there's possibility that this thing does just grind back up over here. But through the general idea of how structure should work, it should warrant another move to the downside. And that will be your big tester. This will be your level here now, which will be, okay, are we actually going to get this thing to really break? Because you got to think, if this is coming down here, support, resistance, comes back down here and tests here. If this thing breaks through here, the significance of this is obviously the fact that this little structure itself moving, but it takes it outside the channel. And if it takes it outside the channel, well, then you've got your measured move of the channel, which actually opens the door to 62s. Same sort of thing though with, as I said, moving. If you want to tackle these levels, you need to be able to break these levels here. Same sort of thing. You're moving down. If you want to tackle these levels, you've got to be able to break these first levels here. If this comes back down here and holds as a support again, well, that's obviously double bottom. Double bottom, it leads more into the idea of rejection and a bit of a move back up. And I think that's when you sort of move up to 65 over here. So in the short term, in summary of all, after all that, I think outside this box, I think above, sort of below 60 or above 95, let's just call it sort of 65 even, or below 64, 60. I think that's going to give us our short-term move. I think targets after that are going to be back down to the 20s as a test. Top side's going to be up to 65.30 for the test. And then I think that's going to be what sort of tells us what's happening here. But as I said, it's kind of in a little bit of no man's land because you've got conflicting things. You've got this higher time frame structure, which warrants a move back down to the lows. But we've seen Aussie be incredibly resilient, sort of through the last 3 or 4 months, and produce a whole bunch of V shapes. So it doesn't rule out the idea that this thing could just go, well, I don't care about structure, and here's a flag, and bang, I'm moving up to the top side. But I think in the short term, below 60 or above 60, so 64.60, I think above 65 even, you've probably got a 20-30 point move to these two levels over here. And then I think that's where we can sort of start to sort of pick what we're going to sort of see in terms of further movements there. So again, look, I think it's just really comes down to what's happening with the US dollar more broadly at the moment. All right, so move along in terms of that. Let's have a look at DXY. It is sort of obviously the ugly sell down, a little bit of recovery, a little bit of recovery. So over the weekend, I said, look, you know what I mean. Should this level through here hold this 95? Jesus, I swear I've got some sort of level of dyslexia. 98.50s, 98.60s, this kind of grey zone. Just to say, the grey zone through here. Why? Because, we've seen that this is a level that the markets like to sort of flip off. Try to hold it, sold down, try to hold it. And this is the point of leaving a lot of these markings on here because you can see that the market will revisit previous levels. We're looking at sort of price action and flow and this kind of stuff. I assume to sort of some degree and level that sort of, you've got teams of analysts of people who are actually moving markets that are saying, hey, look, if it gets to this level, let's buy it. If it gets to this level, let's sell it. All we're doing is really just replicating what they are doing. We're trying to sort of analyze how is that flow happening? How is that structure happening? And that's what we're trying to sort of piggyback off. You're not going to move the market, but you've got to be able to read how they're going to do it and then obviously react accordingly when levels either hold or break. And that's the whole point of the price structure. So in terms of that, this is what is going to so obviously a descending triangle. We've got a solid line here where the buyers are held. We had a bit of a gap down this morning. So these things typically would, in a sort of actual structural sense, lead to a break down here. It's basically a consolidation. You can see that the buyers are holding it, but the sellers are pushing it down, and it's coming to this little point down here, this little triangle, where we're either going to get a pop and it's going to move back up this way, or we're going to get a break and it's going to shoot down this way over here. So as it comes into this little sort of point of the triangle, I would say possibly even through Asia. I mean, Asia, I never really hold too much faith in anything happening. Nothing major anyway, but, because the powers to be and the sort of people that have the volume to move these markets are sleeping. No one in Australia is really impacting markets as drastically as they are, of course. So yeah, we'll see how this sort of goes here, but I would say certainly, look, I mean, it would favour the idea of a continuation to move down over here. So going back on Aussie, that means upside on Aussie, obviously, even though Aussie's not part of DXY. Use DXY as a barometer of the general market consensus and feeling towards US dollar. Now, it doesn't always run as perfectly with Aussie, but that's a story for another time because that's certainly a method for trading Aussie to use DXY in that manner, but or in a different manner. But anyway, whatever. Point is, it's coming into a little point here. We had a gap down this morning. This is on the 4 hour. Have a look on the 1 hour. You can see here's your gap. Bang! It's going to close it straight away. Now with these gaps and that, I've said a couple of times. Actually, it looks like it may have just closed it. Gaps, they'll either sort of close it straight away and then run down. They'll leave it open and try and close it in Euro session. So it means that you spend the whole day down over here kind of thing if they wanted to run with it straight away. Or, yeah, as I said, it could come back. It could take a while, as we saw a couple of weeks ago with these gaps over here. It took a couple of weeks for these gaps to close if they don't do it in the session. This is a good example here of sort of like gap down, close it, and then just run away with it. So downside, it would sort of favor the idea of this thing breaking a little bit lower. But obviously, look, even after this little gap down here, market said, hey, look, you know what? We're not going to run with it straight away. We're happy to buy it at this level down through here. So I'm going to give it a little bit of breathing room. I'm going to sort of put an alert down under here a little bit. I'm going to call breaking lower. I think that's a fair thing. Gives it a bit of breathing room through this support area because it's not like just a right to the cent kind of thing. But if we break through the support area, then we're probably looking down 97.80, which is a fair decent little drop off in that. And we're going to see those other parts of the market play accordingly. We do have 61% of this recovery of this last leg down over here at 98.30. So look, it could be something through here. Again, this is probably look. I'm the big thing at the moment. The question in my mind is this enough to just that's it, bang, everybody's on the US dollar like pump train, and now that's it, it's over. If I put my cards on the table, I would say no, I don't think it is. I think yes, it was a shocking number. I think yes, the revision was shocking, and I think the markets acted somewhat appropriately given the data that was presented to it. Um, But I think it's too far away from the FOMC for people to start sort of positioning too heavily for it straight away. Um, how that's applicable to this is I think that we could see some move back up over here. I do think that I don't think this is it. I think this is a warranted reaction from rubbish data, rubbish revision. I think that we had there was like some nuclear sub sort of stuff or something happening late on Friday night / Saturday morning, which actually gave that second sell down. I think it was this one here, the 5 o'clock here. I actually misread it on the timing when I was doing the weekend analysis because I thought it was the ISM, but as you can see, 5 o'clock on Saturday morning, local time Melbourne, that's the sell down bang then. That was due to the US positioning some sort of attack subs or something over near Russia. But that kind of really got abated pretty quickly. Excuse me, I saw some like reports on the Kremlin sort of saying that, look, they were already on their way over there. We're not taking it as any sort of threat kind of thing. It's just what's happening. So kind of like the media, and sound like a tinfoil hat person whenever you mention the media, but it sounds like more like the media and the headlines are trying to sort of really spark it up to be something a bit more than it actually was. So, we are in a consolidation here. I think sort of, if you get back up above 90, look, I mean, obviously over here that is your bigger kind of level of recovery. But I think if we sort of actually get down and actually draw some lines on this and sort of say, okay, where could we be going? So should we buck this trend here? Because we've got a little push up over here. So this is a little area in which we have a smaller zone. This is obviously a bigger zone down here. So move up here. Doesn't mean it's out of the woods. Need to come up over here. and then sort of like, test up over here. So look, there's a number of levels in which, even if this thing does pop a bit, the market could go, yeah, that's enough for us, and then knock a bit down. Could get up here. This is the bounce after the NFP, just prior to that, sub headline. Um, Bang, knocked it back down. Or even if you get higher, well, this is obviously a level that we've had marked from the highs back over here, which have worked so hard to sort of get above, and then retest on the top side, and it gave it away. So, I think that this could have some sort of move up over to these levels over here. Though, as I said, there's, a lot of possibilities for the market to just do this. I think there's a lot of potentials for, even if this thing does pop, for the market to just slap it on the nose. So, it's a bit hard because, and this is it. It shows in these other markets as well because it's on the cusp, like Aussie, as I said, it's in no man's land. If we get some direction from DXY, we'll probably get some direction from Aussie as well. Well, we definitely will. We'll get some direction from Aussie as well, even though Aussie's not part of DXY. If we see the market start to buy up and start to run this thing back up over here, you're going to see Aussie suffer a little bit. Likewise, if we see this thing break down through here, we're going to see Aussie recover a little bit there as well. But I think there's certainly work to be done. I think there's a lot of levels where the sellers could still step in here with DXY, but I don't feel this is it. I don't think we're, bang, did all this work to get all the way back up. I'll say all the way back up here. If you take it in context, it's still at the lows. But, did all the work to sort of rally up through this and then one report with bad revision and that's it? I don't know. I feel we probably got at least some consolidation, larger high time frame sort of consolidation zones around through here. But again, look, I'm prepared for it should that alert go off and we go down underneath there. And flip on gold. Gold's actually very resilient here. So this, let's put in the 4 hour. This is the level I was looking at, 61%, and it looked pretty good yesterday. Actually came here and it sold back down, or a couple of dollars shy of it. Um, but then obviously powered through for the second effort. So look, this is a perfect idea of the structure. We move up, resistance, move back down, tackle the highs, break through. Now we've made a new resistance, come back down. Previous resistance is now support, and it's moving through. And structurally wise, we want to see what's going to happen should it get to 85. So let's put a little zone, little cap on that there. That's your little zone for gold here. It kind of feels I say, gone are the days, but gold forever, well, not forever, but for a long time has sort of been something that moved. I've given it sort of, $10 range or so. I used to say $5 range and shit. And actually, when it was around 1,600 bucks, $5 is probably all we were getting. $5 range through Asia. um, the last couple of months, well, last couple of months, not the last 2, 3 months, but prior to that, a couple of months before that, when we saw that big rip up to sort of 3,500, we were doing $50 hours in Asia, like because the Chinese are buying so much and yada yada yada, and so you get accustomed to it moving so much, but typically you don't see gold move that much, particularly in Asia sessions. So this could just be the little breakout box that we have here. So you know what? I'm actually going to do that. I'm just going to bang that up over there and say I'm going to extend it down to that wick just to give it a little bit of extra breathing room. And that's what I'm looking for. Again, these sort of things, call this, even though it's sort of, short, well, it's not too short, but call this consolidation through here. Should we sort of see it sell down from 80s back down to 72s and we just sort of sit in this $10 range here? Consolidation favors continuation of the direction. And so this is in this structure, moved into it in a positive. Consolidation would lead into the idea that we are breaking and going to go higher. As I said, I think sort of US dollar, let's see what happens with that. That could be something that could weigh on gold here. If we see this sort of fail to sort of, even test this zone here, so if we see a bit of a failure and this comes back out the bottom here, well, we probably come back down and we'd probably be targeting maybe around the 50s, where we can see that they obviously like to hold it before they springboarded it up here. I think it was sometime through Euro last night. So again, a little bit of wait and see. And this is what I said at the very start of it. We don't have any massive catalysts. There's no sort of big bit of data coming out that the market's like, oh, we're expecting this, so let's position heavily for it and then act accordingly for that. So what do? We fall back onto price structure and we fall back onto sort of like, the flow. Let's just drag this. I just want to say this lines up pretty well with this previous resistance over here, actually. So you can tell that this is a level. They springboarded it up, boom, all the way back down over here. So look, recovery's been fairly decent off the back of that, because of course we were coming to this big point where we could potentially have had a big major breakdown. Again, is this enough? Is this the thing? Is one bad NFP with a shocking revision enough to get this thing really people running for the hills and saying, hey, you know what? Gold's actually awesome again. Because you got to remember, even through last week, the market was not liking gold. They were actually selling the crap out of gold all the way through down here. And it just so happened that that report came out like this, and oh, okay, now we love gold again. Hey, look, that can happen. But again, we've got to see, are these moves sustainable based off that one bit of data? That's the big sort of question in my mind at the moment. I don't think it is. I don't think that that's the thing that makes you go, yep, cool, US dollar back down to 95 or whatever, gold 3,500. I mean, it could, but that's why we need to have the price structure dictate that. We need to see that, as I keep saying, we're not going to move the market, but what we can do is see is the market sort of taking this as an excuse to go, hey, let's just, I was selling it here. Now I can sell it for here. Oh, well, that's even better, isn't it? And they start to sell that back down there and use it as a catalyst to sort of sell that into it. So that's something I'll be watching. But I'm not expecting a great deal through Asia. But I do think above 87, below 68, $20 range there, I think that'll give us direction through the rest of the session. And I would say probably a test back down towards maybe 33.50s and see what the market does there. On to silver. And silver's grinding back up, coming back into this long-term sort of level. This is a little resistance. It was a 15-year resistance level. Was a support, broke through, grinding up over here. Again, is it enough now? Are we going to see this thing pop and just keep on running? Very well could. It did sort of, if this were to be a bit of a move down here. No, I'm not too happy with that, actually. Look, it did sort of move through here, but again, what I say with these sort of falling resistance and falling supports, for the market really to be truly sort of paying attention to it, you want to see explosive moves through it. So if the point is, it's sort of like if you're trading like a little downtrend channel and something just dribbles out the side, well, the market's not watching that. I mean, this is only the third potential hit there. The market's not watching it because you want to see the big explosive move, because the big explosive move is stops being hit. People going, hey, look, I'm going to keep trading this short side, long side, whatever, as long as it keeps respecting that line. Now it's not respecting the line. I want to close my positions. Bang. And they move it back up. When things just dribble out, makes me question it. It makes you sort of think, well, it's just they're not actually looking at or respecting this line. I mean, this is just a nothingness kind of line. But it makes me sort of think that this potentially would just roll over here. This is on the 4 hour. You're overbought. You're dribbling out small candles. I'm going to put a little alert here and sort of say this is a rejection. As I say, I haven't traded silver in quite a while, actually. But yeah, below 37. Let's call it 37 or whatever. I would say you probably come back down here and revisit these lows over here. And we're actually seeing DXY sort of pops through its little short-term falling resistance now as well. Copper, how's that one holding? No, not really doing anything. Just bang and dribbling along here. Look, it's a bit tough with this sort of thing because this was such an ugly sort of sell down here. Like, so 21%, nearly 22%. It's really just holding the lows here. I think this is the kind of thing, I mean, you can't even sort of say this is a bear flag. I mean, technically it is. Like, here's your pole, here's your little flag here, but should that be it? I mean, I don't think you're going to get, like, this is such a large move. I just don't think you're going to get another move. Like, and this is why I say you can't really call it a bear flag, because you're not going to say, okay, there's your flag, there's your pole, there's your move down here, and we go back down to three. I don't think that's going to happen. So I'm reluctant to call it a bear flag, but as I've said a couple of times, I do think we have some targets down over here to be touched up before we see any sort of buy effort. I don't think this sell down's done yet. This reaction here has not been significant enough, like we've seen previously. I mean, look at some of the sell downs. This is the April sell down. Look at the bounces. Bounces. You know what I mean? This thing came up in one candle. This thing came up straight away and never looked back. Well, and then we look at what we're doing right now. We're just dribbling along down the bottom here. So I would say we still have a little bit of a move down here. We do have a rising support coming through over here, which, I don't know, have I put an alert on this? Yeah, major road. So I've got an alert set on this one here. So I would say this is probably, let's put this on every visual, all all time frames. So I would say, yeah, probably down around that sort of 420. Maybe, as I said over the weekend, maybe a bit of an overshoot. This is a pretty strong horizontal down over here, which is the April lows as well. And maybe a little bit of a shoot over here. If we do get down here, I'd be very much watching for what it does on a daily. This is daily now. Because if it wicks down here and then closes up over here, I think that's your key for that to be, or that's your sort of clue for that to be a bit of a bottom. If it comes down and then closes out here and disregards this, then we could be going back down, back below 4, which is that strong horizontal. And then you got to think you're breaking major rising supports, you're breaking strong horizontals. You could be going back down 350, to be honest. So let's get rid of this one. Yeah, I would say 350. I mean, that looks starting to look. If you put a horizontal along through here, I should do this properly with the. Okay, let's return. Yeah. Now that's a big call, and all of a sudden now we look back at this thing and sort of think, this could have a little bit longer to go. It's got to get here first, obviously, but should we break there? That's potential. Again, this is planning out for these things. It's holding this horizontal here at the moment. You got the rising support underneath it. You got this horizontal, very strong. But should it break these two here, if we go under 405, 127 retracement of April's bounce up to the highs and to the lows, comes in with this horizontals from back in May 23, that's your likelihood to sort of do things. So look, should this thing ever get down there, I think that's definitely a good buy at that point. Just quickly flip back onto DXY as we do this, and we can see again lower time frame. It's starting to break out of this falling resistance here. So let's say we've got a couple of little short-term targets to see how high they want to take that over there. Cool. All right, and finally with USD China, look, just dribbling back down. Get back onto the higher time frame with this one. Rejected from that zone. I covered this over the weekend. Okay, bang, moves up here. It's grinding a little bit. Let's put a little bit of a base here because we can see that this is where we had buyers previously. This is where it wants to hold. I would say you need to hold this. I want to see this thing rally here now. And should this move back up, then okay, you can play in these areas up over here. You fail back down here, well, I mean, that's it kind of thing. Just let it go for a bit for now. But as I said, all this effort up here, yes, shit rejected from where you would expect it to. It took 2 months to get back up over here. Was it 2 months? Yeah, 2 months to get back up over here. You don't break through levels 2 months with your first time you revisit it. So it's it just so happened that the data came out at the same time as it as well. But if we get onto a low time frame, you may actually see, was it selling down first? 10:30. No, it's okay. Pretty within that 4 hour candle. But as you can see, structure, bounce, bounce. It's holding the zone here up above, 7187. Let's just put a little alert here. I don't really care what it is. It's just make us have a look at it. But yeah, again, back up over 720, and this thing could be back in the running a little bit there as well. All right, cool. I think that's about it. That's it from me.